Hello and welcome to Pro Trader Strategies Market Commentary for Monday, May the 21st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it says that everything I talk about in these market commentaries is not considered investment advice. I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with economic data. Well, it's a Monday, so we wouldn't expect a whole lot of economic data. But on top of that, we have a bank holiday out of Czechoslovakia, basically all of Europe, French, German, and Canadian bank holidays. So pretty much everybody on leave for today. We should see a continuation of these quiet markets and volatility to come out, especially with the equities rallying today. But let's take a look at the overall markets. We've got crude oil moving higher, testing that $72 handle. That looks like it's almost a sure thing. We are just trudging along to the upside with the crude oil markets. That demand still lingering over there. People are really pushing that higher. We've got gold futures just slightly in negative territory, but the thing to note is it did come down and touch the point of control and the 61 Fibonacci level that I've been talking about. It came just shy of the Fibonacci level, but that's pretty close for government work, and we got a bounce up and away. So that's really starting to build that bottom that we've been talking about in gold futures. You know, I talked about it being overdone to the upside here. Now it might be a little bit overdone for that move to the downside. We probably will get a little bit of a bounce here. We're going to have to watch the rest of the week, but I think that looks like it's really making a solid bottom. Now with Bitcoin, they're up, almost 200 points today. Friday's market action made it look like we were making a bottom, especially with today's move to the upside. That could be considered a continuation pattern, but it is kind of happening at the bottom of this little slight move here. I don't think we're out of the woods to the upside yet. I still am under the mantra it wants to come back down and test that 5880 area before it really wants to be able to rally up again. And we've got bonds moving higher again. People are going to probably price this in. I talked to a bunch of mortgage people. They like it right around the 10-year right around 3%. And that's kind of about where we are right now. So that being said, this seems like the sweet spot for the mortgage companies where people aren't running for the hills, but they are continuing to refinance and buy houses. So any much higher than that, what we've seen about 6 months ago is people running for the hills and not refinancing and stuff. So hopefully they hold off a little bit longer and we can get some of that stuff done, because California is going to be hurting. You heard it here first. VIX continuing to move lower as the Dow Jones Industrial Average and the broader markets are moving higher. Dow up almost 350 points on the day. It opened up almost 200 points higher, breaking up and away from this 23 Fibonacci level. That was acting as resistance. We opened above that today, and it lined up with the point of control. We're moving away from that. That is a strong bullish move, and I've talked about this. I think that they are setting up for the equities to start moving higher now. NASDAQ also up almost 50 points on the day. We can look at the E-mini S&Ps. All these charts look pretty much the same. E-mini S&Ps struggling to get above that 61 Fibonacci level right now, which is making it look like a double top. But I really don't see that as being much of a resistance with the rest of the broader equities moving the way they are. And we can see we kind of moved higher on the open. This is what I was talking about with the Dow Jones opening up almost 200 plus points higher. That is an ETF, or that is not an ETF or a future like we have with the mini S&Ps and the NASDAQ. It is a index, so it's just tracking the index. It's not a tradable market. But as we can see, E-mini S&Ps overnight inventory pretty much flat and then moving higher as soon as the market opened. All right, on to a few things that I've done. With 3M, I decided to go in here and sell some puts with the broader markets moving higher. So with that being said, in 3M, I went in and sold the 190 puts, which is below this low here. As you can see, I've got a nice little area that should act as support down here as it did before. So I'm below this low. and I was able to sell those for 94 cents. All right, so looking for a bullish move to the upside. They still have pretty high implied volatility. They don't have earnings or their dividends involved in this, so a nice move higher, volatility coming out. That should help me out pretty nicely here. Now, a couple of trades that I'm looking to take off. They haven't been executed yet, but I'm looking to get out of these, and it's in CMI, which is Cummings. I sold the June 135 puts, if you remember, for 55 cents. I'm trying to buy those back for a quarter right now. We've got volatility coming out, market moving higher, directionality working in my favor, also volatility helping me out. So looking to get out of those for 50% of my max profit. Like I said, it's a working order right now and I haven't gotten hit. I think the last I checked, the offer was 35 cents. So I'm just going to let it work there. StarBucks, I'm actually slightly past my max profit here. And if you guys remember with the StarBucks trade, I have this both in my IRA and in my margin account. In my IRA, I went in and sold the June 55 puts in there and then defined that risk by buying the 45 puts. Just trying to get out of my StarBucks right now for the short puts. And with that being said, I originally sold that strategy all together with the 55 puts. I sold the 55 puts for 50 cents, bought the 45 puts for that nickel. So all in all, 45 cents, trying to get out of my June 55 puts that I'm short only. And I'm trying to buy those back for right around 20 cents-ish. I think it's actually 19 cents is what I'm working. Let me just double check. Working an 18-cent bid in StarBucks. So slightly better than 50% of my max profit. But we had a nice little move this morning. I was on the bid. It's looking like it's maybe a little bit away from me. But I'm going to be looking to get out of StarBucks as well today, both in my IRA and in my margin account. In my margin account, I sold those same 55 puts for 50 cents. Didn't define it. So looking to get out of both of those, slightly less than 20 cents. All right. That's all I've got for you guys today. Friday's webinar is going to be a really good one. It is going to be how to do a long diagonal. And it seems like it might be very easy, but I have some specific rules to help you set up this strategy so that you can increase your probabilities of success. And I'll show you all of those little nuances in Friday, or sorry, it's not even Friday, it's Thursday's webinar. Thursday now we're doing it. All right, so check out Thursday's webinar on the long diagonal. All right, that's all I got for you today. If you can't take that, take it easy.